Bitcoin has plunged below the critical $60,000 mark, raising alarms among investors. With ETF outflows intensifying and inflation fears looming, what does this mean for the future of cryptocurrency? Here's everything you need to know. Looking ahead, the immediate future for Bitcoin hinges on whether it can reclaim the crucial $60,000 mark. This price point has historically served as both a psychological and technical barrier for traders, often influencing market sentiment significantly. Bitcoin's inability to break through this level could lead to further declines toward the $55,000 to $58,000 range, which many analysts view as critical support levels. This potential downturn is exacerbated by ongoing ETF outflows and the Federal Reserve's hawkish monetary policy. The Fed's commitment to combating inflation has created an environment that dampens investor sentiment in riskier assets, including cryptocurrencies. Furthermore, the regulatory landscape remains uncertain, adding to the unease among potential investors. Conversely, a recovery above $60,000 would indicate a significant shift in inflation expectations or renewed inflows into Bitcoin-focused ETFs, which could bolster market confidence. Analysts speculate about the emergence of a Solana summer if Bitcoin stabilizes, suggesting that renewed investor interest may shift toward other cryptocurrencies if Bitcoin finds solid footing. The correlation between Bitcoin's performance and altcoin movement is well documented. A bullish Bitcoin often paves the way for altcoins to thrive, creating a ripple effect throughout the cryptocurrency market. As the weekend approaches, traders should closely monitor Bitcoin's price action, as this period is critical. It could determine whether the current market fluctuation is merely a temporary dip or the onset of a more extended bearish phase. With volatility continuing to characterize the crypto market, strategic positioning will be essential for investors. The next few trading sessions will be pivotal in establishing market sentiment, making it imperative for investors to prepare for potential scenarios and adjust their strategies accordingly, as the outcome could significantly reshape the cryptocurrency landscape in the coming weeks. To understand how we arrived at this critical juncture, we need to examine the recent history of Bitcoin's price movements. Over the past few weeks, Bitcoin had been consolidating around the $60,000 to $64,000 range, buoyed by optimism surrounding positive US-Iran talks and bullish options bets. This optimism was fueled by a sense of stability in global markets, as investors anticipated a potential easing of geopolitical tensions. However, rising inflation data, particularly from the PCE index, began to undermine investor confidence. The PCE index, which reflects consumer spending trends, indicated that inflation was outpacing expectations, raising alarms among market participants. Concurrently, a broader tech stock sell-off began to unfold, further exacerbating the risk-off sentiment among investors. As inflation concerns mounted, ETF outflows accelerated, with investors reacting to the likelihood of rate hikes by the Federal Reserve. The Fed's posture on interest rates has significant implications for risk assets, including cryptocurrencies. This broader risk-off environment led to significant declines in correlated assets, including Bitcoin, which often mirrors the volatility of tech stocks. The decline to $58,000 has raised questions about the sustainability of Bitcoin's recent gains, igniting debates among analysts about the future direction of the cryptocurrency market. The current market landscape presents a dual challenge: to ascertain whether the recent drop is a mere short-term correction or indicative of a more profound bearish shift in sentiment. Investors are now grappling with the potential for continued volatility as they assess macroeconomic indicators and policy shifts. In the coming weeks, market participants will closely monitor inflation trends and Federal Reserve communications to gauge the likely trajectory of Bitcoin and other cryptocurrencies. The outcome of this analysis could define the market's direction in the near term. Bitcoin's recent price drop has sent ripples through the cryptocurrency market, with its value falling below the critical $60,000 threshold. This decline is significant for multiple reasons. The $60,000 mark is not only a psychological barrier, but also a technical pivot point for traders. When Bitcoin loses this level, it signals a weakening of bullish momentum, which can trigger stop-loss orders among investors, leading to further selling pressure. Compounding this situation are recent reports of substantial outflows from Bitcoin exchange-traded funds, ETFs, suggesting that institutional investors are scaling back their exposure to Bitcoin. This shift contradicts earlier narratives that highlighted a steady trend of institutional adoption, raising questions about the sustainability of Bitcoin's growth. The broader economic landscape is also contributing to this volatility. Inflation concerns and the Federal Reserve's hawkish monetary policy are exerting pressure on risk assets, including cryptocurrencies. When the Fed adopts a hawkish stance, it typically reduces liquidity in the market. This decrease in liquidity diminishes the speculative appetite among investors, making them more cautious with their investments. The emergence of a bear flag pattern on Bitcoin's price charts adds another layer of concern, indicating a potential continuation of the downtrend. Analysts warn that if current support levels fail, Bitcoin could plummet further, possibly reaching the $55,000 to $58,000 range. For average investors, these developments carry significant implications. The stability and potential for growth in Bitcoin, once viewed as a digital gold or a hedge against inflation, now appear more precarious. Investors must remain vigilant and monitor these changes closely as the market dynamics shift rapidly. The current landscape suggests that the bullish narrative surrounding Bitcoin may face substantial headwinds in the near term, prompting many to reassess their investment strategies. Looking ahead, the outlook for Bitcoin will largely depend on macroeconomic indicators and the actions of institutional investors. If inflation persists and the Fed maintains its hawkish approach, Bitcoin's price could remain under pressure. Investors should prepare for potential volatility and consider diversifying their portfolios to mitigate risks. The coming weeks will be critical in determining whether Bitcoin can reclaim its bullish momentum or if it will continue to struggle in the face of adverse market conditions. As Bitcoin struggles to regain its footing, what are your predictions for its price movement? Share your thoughts in the comments below and subscribe for more daily deep dives into the world of cryptocurrency.